Hey guys, welcome back to the channel. In this video, I'm going to be showing and going over what it's like to trade reversal patterns and exactly when you can get into the trade, what the perfect entry is and how it actually plays out, and the things that you should be looking for when taking a trade and noticing a reversal pattern. Now, of course, when you first start trading, it's very important that there are so many patterns out there. You have head and shoulders, you have cup and handles, you have so many patterns, but it's important to focus on one pattern alone. Try to focus and visually memorize that pattern, so where you can literally see it in every chart that, when you see a chart, it's right there, and it's a pattern you familiarize yourself with and you master that, and then you can move on to something else. But when you see that it's profitable, you'll start realizing that pattern is something that you like, and that's basically what you're going to be looking for in so many different charts. So with that being said, I'm going to get into just some of the details when you do trade reversal patterns. As I said, identify a pattern. You're going to see a chart, and if the pattern is not there, don't force it. Don't force, or don't try to create a pattern just to justify a reason to take the trade. Okay? Because a lot of people will do that. You get yourself into looking at a company and you want to. Now, if you're a long-term investor, that's a different story. This is more for swing trades. Don't try to justify a reason for taking a trade based on a pattern that's not there. So, identify clear support and resistance, whether that be a moving average or just simply support and resistance. Personally, for me, I like using, moving averages for support and resistance. I use the 50 and the 200. You can use the 50, the 100, the 150, whatever, some people use the 9-day moving average. It really just depends on what you find is best for you. Everyone, like I said, is different. Trading is not a one size fits all. A strategy will vary from person to person. I can get in the same trade you get in at the same time, and we'll have different results because we manage them different once we're in that trade. So it's important that you identify areas of support and resistance before you get in a trade, and your entry, stop loss, and a profit target. That is a must in every single trade that you take. Wait for confirmation. Patience is key. You don't make the assumption that you think it's going to reverse. You see, and like I said, I'll be going over more in the trading platform. But if it's always bouncing off support, if it's bounced 2-3 times, the fourth time is not 100% given that it's going to happen. So don't make the assumption by getting in too early, especially if you don't have a stop loss, because then you'll be basically holding the bag, hoping it'll come back up, and that's never a guarantee. And one thing to remember is that just because it's a pattern doesn't mean it's 100%. It's going to be, you're going to be correct 100% of the time. When that pattern breaks, there's a reason why people put stop losses, is to prevent, the pattern's broken. So now what? There is no significant, when you find a support and resistance, now you're going to the next level. And that next level of support could be $5, $10, $15. Who knows? When you have these stocks that trade with wide spreads like Amazon, Tesla, they're you can have a stop loss of $20, $30. Penny stocks, you can have 5-6 cents for a stop loss. So, and support and resistance. So it's very determinant on the stock that you pick, and understanding the chart itself and trying to develop a pattern. Like I said, if the pattern is there, it's there, but do not try to force it. One rule for me personally, like I said, this is all based on each person's different trading style, is when I finally see a confirmation candle and I'm deciding to get in, I get in 5 to 10 cents above the previous day's high. And it'll be easier when you see this visually, but just keep that in mind, that for me is something that this is how I take a trade. So if a stock today ends or closes at $19.50, but it actually went as high as 20, I'll get in tomorrow if that stock is anytime in the day hits $20.05 or higher. That's just my rule. So it's a 5 to 10 cents above the previous day's high. And like anything, when you are looking to take trades, you're trying to find reasons not to take the trade. You're not trying to find a reason to take it, because we all have reasons to take it. The reason is you want to make money. But you're trying to find reasons not to take the trade. So again, you're looking to see if there's a pattern. You're seeing if there's clear support and resistance. Are earnings coming up? Every little thing that you're looking at plays a factor into this, especially if you're swing trading. Like I said, long-term investing is a little bit different. But for swing trades, if you're trying to get in and out, even for day trades, if you're trying to get in and out in minutes, days, even a couple of weeks, you do have to identify trends and understand where the clear support and resistance is, identify what your entry is, what your stop loss is, and what your profit target will be. All right, guys, so we're here on the Webull trading platform, and I'm just going to pull up random stocks. Just like I said, I can literally go down, and because this pattern is a pattern that I just love trading, it's so easy for me to identify. And so when we look here at Overstock, okay, I'm going to zoom in so we can kind of look at trends in a shorter term. And obviously you think, well, that's easy to say in hindsight. But again, there's a reason why the entries are taken when I take them. Looking at this, when it was at $95, you can see it's going on in a clear downtrend. You're looking at this, it's clearly going down. First question, if I see this on a daily basis, this is a daily chart, by the way. If I'm looking at this, I'm thinking, okay, it's in a downtrend, but is it going to hold? This is a 50 moving average and a 200-day moving average. Is it going to hold this 50 moving average? Well, it touched and buyers stepped up. Okay. But again, like I said, you can't anticipate that the next day it's going to bounce. You just can't. That you're basically at this point just taking a risk, and it's a gamble of, well, buyer stepped up, it should go higher. Well, yeah, that's logical, but again, that confirmation is not there. So you wait. What happens the next day? The next day, yes, it did bounce. It went higher, but sellers stepped up. So you can see that it closed here around, give or take, was it $91.30? So the close was at $91.30. My entry will be the next day if this stock, anytime the following day, can go higher than the high of the day. Not where it closed, at the high, the top of the wick. So the top of the wick for this day was 93.40. I would put my entry at 93.45 to 93.50, give or take. Okay. Next day, you'll see I would have been in the trade. I would have been in the trade because this one went to 94.56. I would have been in the trade, and as you can see, it went up all the way to 101. That right there, my target personally would have been somewhere in, if you zoom out, you're trying to look for somewhere like right here, $98, give or take. That would have been ideally my profit target. As you can see, this ran to 101, but then sellers stepped up and, everybody started taking their profits. So again, though, the confirmation is simply the second candle for me all the time. You see it bounces here. I'm not getting in here. I wait the next day. Great. Now I'm getting in only if the stock can go higher than this day's high, which like I said, the high was 93.40. So I'm getting in at 93.50 is basically my entry, which would have triggered me and it would have ran $6 basically in a day. And then I would have been out, like I said, because my profit target would have roughly been that $100 range. Now, again, if you don't have a stop loss, this is what happens. You see, we have another pattern again that repeats. So you would have probably lost money because I would have put my stop loss under this candle where it bounced off the moving average. Again, we repeat the same process, same stock. What's the pattern? It comes to the moving average. Right here, it basically leaves a bottoming tail. Again, buyers did step up. No confirmation, though, that this is going to bounce tomorrow. As you can see, it did not bounce. It stayed, though, within the moving average. So it's kind of consolidating. And then the following day, now it looks like it could be on its way to reversing again. So again, the high on this candle right here is 92.20. So I'm basically saying, you know what? If the next day it's at 92.30 within the day, I'm getting in. What happens? I would have been triggered in the trade. I would have been in. And then it literally, again, went up to 102. It's the same process. Basically like looking at a duplicate, a mirror image of this retracement went up to roughly this, and this one went a little bit higher, but you get the point. Again, where would I put my stop loss? It would have been under, you could put it under this candle, of course. The bigger the stop loss, the smaller your share size has to be. Now, if you're doing options, that's a different story, but again, it's all in risk management. I'm not willing to risk the fact that I'm just going to let it and see what happens. No, I'm going to put a stop loss that if it breaks under this moving average, I'm out. And then, of course, look at it now. We would have gotten in. We would have been up here. And if you didn't take profit now, you're actually down if you didn't have a stop loss. And this is only in a matter of a week. So you're looking at 102 to 81. You're looking almost at basically $21 swing in 3-4 days. So that's how I trade the reversal patterns. I wait for confirmation, especially on the second candle. Again, like I said, I use the 50 and the 200-day moving average. Just going down, like I said, I can look at these, and I only like taking trades where it's happening above the 50-day moving average. All these that are under, because what was once support, as you can see here, now becomes resistance. The ceiling has now become the floor. That's all, that's a saying, because this was the floor. Now it's the ceiling. As you can see, it was holding steady. This is Exxon. It was holding steady, and you can go all the way back. If we're just looking at the 50, ever since November, it's been holding the 50-day moving average. And all of a sudden now, the trend says it's going to hold, but it didn't. Now it looks like this is the ceiling. So again, this is why you put your stop losses. Because now if you don't put a stop loss here, well, now you're down here. And you're just hoping and praying it goes back up, because now the trend is broken. And now you're basically trying to define, okay, maybe around this 55, the 200-day moving average, hopefully support. If it breaks this, then all bets are off. Again, looking at this is also something to look at, is when the 50 crosses the 200-day, that is that's basically confirming its upward trend. Now, of course, you can say, well, it started back in November, right? But the long-term trend here is still bearish. It's still under the 200-day. Anything under the 200-day moving average is still technically in a downtrend. Once the 50 crosses over the 200, it's basically confirmed we are on an uptrend now. So if you would have gotten in February, this stock was about $50. It ran to $64. So your goal as a trader is, especially in swing trading, is to get in the trade and to stay in that trade as long as possible. And you would technically, if you would have gotten in February, you'd be in this trade for about 3 months. Another one I know off the top of my head here is American Express. It's a perfect pattern as well. You see, moving average, retraces back, bounces, retraces back, bounces. Another retracement, not exactly to the moving average, but it bounced. And you can see this is a continuous trend. Now you're thinking, obviously, from my perspective, if this comes down and touches, I'm getting in. But again, you have to wait for that confirmation. Here, it came down, kind of a mini gap down to the moving average. The next day, huge green candle that closes basically at halfway to this red candle. And that's something that's very important also, that it's basically engulfed half of this candle. So again, my rule is this candle, 165.21, I'll get in the next day if this stock can cross 165.25. Next day, it actually only went to 165.24, so it would not have triggered the trade. But I could still hold it in there. Next day, it would have triggered the trade at 165, and I would have been in this trade until literally 175. I mean, I could still technically be in the trade because I would have put a stop loss right here under this candle, which would be about 159. So again, guys, it's just trying to identify these patterns and being patient, because you can see clearly that anytime you see, it's intuitive to think that it's bound to happen. It's bound to bounce, because it's a trend. It keeps happening. It's not 100% guaranteed. You see it bounce here, you see it bounce here. Third time it's going to bounce, right? Well, it didn't touch the moving average, but it did bounce. And here again, it bounced. So of course you're thinking this next time it's bound to bounce. You never know. Some terrible news could come out with American Express, sends the stock down to 150, which is why, again, you always have a stop loss. GE is another example of, it's holding the trend, holding the 50-day moving average all the way. I actually took this trade. And if you wanted to stop and pause this and try to guess where I took it, it was actually right here. And you're asking why? Because it broke the 50. So I took this trade right on this candle right here. Why? Because it broke the 50. It closed above the 50. And I told myself, if this can go to 1360, which was about 7 cents higher than this candle, the next day I'm in. I got in the trade. When you're looking at this, if I can zoom in and close that out, this looks like it's on its way to reversing. And it very well could be. But it didn't. But my stop loss was literally right under the moving average, and I got out. If I wouldn't have gotten out, I'd still be in this, holding the bag, hoping that this would go back up. And GE is a slow-moving stock where this could be months. And again, if I zoom out just to give you some kind of indication, GE may never hit $13 again. It's not a guarantee. This is a $6 stock back in October. So don't think that it's going to get back there. We all thought, when you look at Walmart, Apple, Amazon, these stocks, they'll never fall. I mean, of course, there's down days and there's sell-offs and so on and so forth, corrections. But when the pandemic hit, technical analysis kind of went out the window. I mean, you look at all those charts and they're horrible. So I'm just saying that's why you have to put your stop losses, and your profit target is something. It could be based on, again, resistance. It can be based on previous highs, or it can be based on percentages. So if you're risking $1,000, you can tell yourself, I'll get out when I make 1,000 or I make 2,000. That depends on you. You have to find that based on your trading plan. You have to implement that. And one last one I'll go over here is Coke. Coke is another one that you can see that right now it was trading under the 50. And then, as you can see here, it's barely going over, but it's still in the somewhat of a consolidation phase. But I could, basically, if I wanted it's a little aggressive, but I could say, it closed at 54.60 right here. If it goes to 54.70, I'll get in the trade. I would have gotten in the trade the next day, and I'd still be in the trade. And probably put my stop loss either under this candle or under the moving average. But when you look to your left, of course, like I said, you're looking right here and seeing that we're basically at all-time highs for Coke. So it's very much possible that it either comes down or breaks through. And obviously there's no telling what's going to happen this time. This is the second time it is testing resistance. But again, earnings are coming up. So that's something to pay attention to, because earnings is a gamble. You don't know, despite the news, whether this will drop or it'll break through to the upside and set a new all-time high. It does indicate down here on the stochastics that it is overbought. So there's little things to pay attention to. But again, if it were me, I would actually raise my stop loss to probably under this candle right here, so that I'm, taking profit already. But if it bounces, if it goes higher, it goes higher. But raising my stop loss so that obviously I have a profit regardless. So with that said, guys, if you have any questions, drop them in the comments. If there's any stocks you want me to go over or look at, or make a video on, just let me know. I like trading on technical analysis, and I only trade stocks that are obviously well-known stocks. I'm not trading stocks that I have no idea. If I don't know what it does or what it is or what kind of company it is, I'm not trading it. It's that simple. I'm just not. I don't care how good the chart looks. It could be but if I don't know, no, because you know what? I'm not, I don't like to see these gap downs overnight on things that I have no idea why this is occurring. So, but again, it's important that you develop a mindset for trading. Understand that not everyone will understand this pattern. Not everyone will like this pattern. It's something I like. There are patterns out there that others like that I don't. But you have to find what's right for you. Study and stick to one pattern. When you see something and you understand, like, oh, now I get why the trend is going this way, or why it's bouncing off this support or resist, whatever, focus on that and look for charts that literally mimic the exact same strategy or pattern that you see. Look for the pattern. Don't try to form the pattern or try to force and hope that this chart should, don't try to create a pattern when it's not there, is what I'm saying. So anyways, guys, drop a like, hit the subscribe button, leave any comments down below, and I will catch you on the next one.